Hello, and welcome to Explain the Charts. Today, June 2nd, 2025, we're analyzing the SPY, combining current market news with in-depth chart analysis to give you an edge in your trading decisions. We'll start by looking at some of today's top news headlines regarding the S&P 500. News indicates that U.S.-China trade tensions are flaring up again, causing some concern, and futures are trending downward. We'll need to keep this in mind. Additionally, there are continued concerns about recession jitters, which have been weighing on bank stocks, so we should be mindful of it when analyzing the SPY chart. Now, let's transition to our technical analysis of the SPY chart. Starting with the one-day chart, we can see a recent period of volatility. The market has been showing an overall upward trend over the past several months, but it's not without its dips and pullbacks. The S&P 500's 10-year return remains high at 167%, which is above the long-term average, yet we need to consider that the current economic climate is uncertain and could be affecting the market. Zooming in on the more recent price action, we can observe that the past few days have been somewhat choppy. There's a bit of indecision in the market, especially considering the current news landscape. We can see the price has been struggling to break above the recent highs. Keep an eye on this level as a potential resistance point. If the price fails to break above this resistance, we could see a further pullback. Also, a previous high around 555, back in July 2024, is another important level to be mindful of. Looking back further, we can also see a significant drop around April of 2025, so we can look at that range as well. Now, let's switch to the 1-hour chart to get a more granular view of recent price action. Here, we can see even more clearly the short-term volatility and uncertainty. The hourly chart will allow us to better see smaller pullbacks and trading ranges. On the hourly chart, we can identify support around the 586 level. This level seems to be acting as short-term support, but we'll need to see if it holds. If the price breaks below this level, it could signal further downside in the short term. To gain an even closer perspective, let's look at the 15-minute chart. The 15-minute chart shows very recent consolidation and chop. We need to pay attention to this time frame to see when and how it breaks through one way or the other. Key price levels to watch: resistance around 591.5 and support around 587. A break above resistance could lead to a short-term bullish move, while a break below support could trigger further downside. Remember to correlate these levels with the broader market picture and any breaking news developments. To recap, the key price levels to watch are resistance around 591.5 in the short term and 555 as a significant high further back. We also can look for possible further downside if 586 fails to act as a support level. Currently, the market sentiment is leaning cautiously bearish due to trade tensions and recession fears. However, a strong break above resistance could negate this sentiment. Remember to always use stop-loss orders and manage your risk accordingly. Good luck, and remember to tune in to Explain the Charts for more updates. Thanks for watching.